All right, so what I'm looking at, everybody, Charlie Moon actually had a strong buyout in Crone, CRON, yesterday, and we put that out for those of you that follow our hot stock picks. We actually put that out as our hot stock pick with an 1160 entry price. So, one of the great things that prosper here in the different classes that we have is we trade options, we trade stocks, and then we can do a combination also. So Charlie and Dan O'Brien, they'll sometimes take a look at my strategies and my picks out there and look at an option play and turn it into a stock play. Vice versa, I'll look at their recommendations, try and look at their fundamentals, look at a stock play, turn it into an option play. That's what I'm looking to do in Crone here. So if we can get a little bit of a pullback here, down around that 1160 or so range here, what I'm looking for is trying to go out probably 3 to 4 weeks for an option play here. So that would put us either at the Feb 1 or the Feb 8th, even going out to Feb 15, the regular expiration in Feb, which I kind of like better because the markets are tighter. We have very tight markets. So let's evaluate this real quickly here. Okay, if we go out to Feb 15th, okay, what is the expected move here, guys? Okay, with the stock around 1180, we can look at this and say, all right, the 12 straddle is trading about $2.70, right? So we have 114 on the call, 157 on the put. So it's about $2.70. The put is 20 cents in the money. So if we take that out of the price of the straddle, that gives us about $2.50 of premium. So the expected move going out to Feb 15th is about $2.50. We're looking for an upside play right now. The stock currently is 1180. So we'd be targeting around 14 or so because we really want to have an entry point at around 1160. Everybody following what I'm doing here, guys? So if we're looking for an 1160 target, expected move is about 250. We'd be targeting really about $14. Okay, so what I'm looking to do is, is there a spread out there that makes sense targeting 14 at February expiration? The 12-14 call spread right now is trading about 60 cents. Okay, 60 cents is a little too rich for us on a $2 wide spread because the 12-14 call spread equals 60 cents. So from a reward to risk, we're looking at $1.40 divided by 60, right? That only comes in at 2.33. That's a little light for what we typically look for, reward to risk. But remember here, we're not looking to enter here with the stock trading up at 1175 or 1180. We're looking to enter with the stock trading down at 1160, about 20 cents lower. Okay, so 20 cents lower with about a 20 delta on this spread, that could take a nickel out of this. So let's say our entry point is now 55 cents instead of 60. Okay, let's say we want to pay 55. Now the reward to risk is much more attractive. It now becomes $1.45 divided by 55, which in this case, the nickel doesn't seem like a lot, right? It's only a nickel, but from a reward to risk standpoint, it has now increased it dramatically. Okay, so that's really what I'm looking at. So I'm going to put this signal out here to buy the 12, sell the 14, regular February expiration, 55 cents. And even though 1160 was our target entry, we'll give it a little bit of room to the downside. We'll say that this is valid with the stock trading 1150 or higher.